Welcome back to the Hectare Trading Grain Market Update, where we brief you on this week's events and what's behind movements in the market. The Hectare Trading Midlands benchmark for feed wheat is £182, remaining flat for this week. The prospect of a US-Iran peace deal has hung over the grain markets in the past few days, as traders weigh whether this is another false dawn. Meanwhile, in Ukraine, wheat exports accelerated significantly in April to 1.3 million tonnes, although diplomatic friction continues over Egypt's acceptance of stolen grain. Ukraine has now demanded Israel conduct laboratory analyses on 16.5 thousand tonnes of wheat aboard the Russian ship Abinsk. India, the world's second largest wheat producer, has exported wheat for the first time since 2022, capitalizing on high domestic supply and rising global prices to ship 22,000 tonnes to the UAE. The London feed wheat May contract has eased back since hitting £190.20 last Wednesday. Following the long weekend, the contract dropped to £186.80 on Tuesday and £186.30 by Wednesday's close. A lack of further momentum saw the contract finish Thursday at £188. Farmers on Hectare Trading have been forward-selling new crop feed wheat in Mid Wales, North East Scotland and East Anglia, and 2027 crop in Northumberland and the Scottish borders. The Midlands benchmark price for milling wheat is £184, down £2 from last week. In Europe, much-needed rainfall has eased crop concerns, prompting the EU Commission to raise its soft wheat production estimate to 127.3 million tonnes. UK winter wheat conditions have declined following a dry April, with 74% rated good or excellent, down from 82% in March. Putting this news into perspective, only 31% of the US winter wheat crop is rated in good or excellent condition, with severe production risks for the hard red winter wheat crop in Kansas and Oklahoma. After retreating to €213.50 last Thursday ahead of the French market holiday, the September contract for Paris milling wheat has declined steadily this week. The contract dropped to €207.50 by Wednesday's close, and again to €206.50 on Thursday. The benchmark price for feed barley is £159, down £4 from last week. According to AHDB data, the condition of UK winter barley has declined. Currently, 70% of winter barley is rated good or excellent, a drop from 85% in late March, but higher than the April scores seen in 2024 and 2025. With UK spring barley planting intentions down 15% year on year, it was no surprise to see the US Foreign Agricultural Service projected a fall in UK barley production for 2026-27 to 6.2 million tonnes. This is down from 6.5 million tonnes last year. The Midlands benchmark price for OSR is £449, down £11 for the week. US soybean markets have been supported by hopes for increased trade following the Trump-Xi summit. Furthermore, the US Environmental Protection Agency's ambitious new biofuel blending targets have forced producers to ramp up output, sending US soybean oil prices to their highest levels since spring 2022. The EU has lifted its 2026-27 rapeseed production estimate to 20.8 million tonnes, while Canadian canola stocks have jumped 27.4% year-on-year to 10 million tonnes due to record production in 2025. Having risen €90 from €438 at the end of last year to €528 on Monday, the Paris rapeseed August contract has weakened slightly over the past few days. With Brent crude retreating from its April highs, rapeseed has lost some impetus, with the August contract closing Thursday at €509.75. Once you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.